Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, November 11th, 2020, just after 7 p.m. Central Time. Let me wish all of our vets a happy Veterans Day and say thank you to all. I happen to have two nephews serving in the armed forces, one in the Army, one in the Air Force. The one in the Army has a fascinating job that one day I will share with you. It's here in America. It's the most unbelievable job you can imagine. I'll share it one day. And I have a niece that got out of the service just a couple of years back. So got a family that keeps going. But to make a long story short, I question if the marketplace isn't paying enough attention to this surge in COVID-19 outbreaks. I know that we're all hoping that the Pfizer BioNTech will come out and work, but it's not going to work in countries like India, Central America, South America, poor islands. You have to keep it at 70 below zero. They don't have the facilities. They could build them, but how long is that going to take? They're all hoping that Moderna or another one of the manufacturers comes out and is something that's maybe a little easier to work with. In America, a rich country like ours, no, we can keep these in the cities. You'll travel to get it, and we at least have something. It is not for everybody. Keep that in the back of your mind. And the market's not paying enough attention to these COVID outbreaks. The mayor of New York, curfew goes in Friday night in New York for a couple of weeks, as I understand it. 10 p.m. curfew, bars, restaurants, and all. I'm surprised they even have bars and restaurants open. We don't in Illinois. And today our governor came out and asked us to do a voluntary lock-in. In other words, unless you need to go to the grocery store or drugstore, something essential, he wants you to stay in. Forget going to the office. He doesn't want that. Can he make it mandatory? You betcha. So that's right around the corner. What about California, Texas, which is overwhelmed? We're overwhelmed in our hospitals. If you were to see the local news, go to WGN News. A lot of you see that. You'll see what I'm talking about because it originates here in Chicago. So you have to build this into your thought process. That's what I'm saying. Now, XLK. It was only a question of when we saw some money come back into QQQ, XLK for the techs. They've taken a hit in the past 48 hours, but not a big one. You filled the gap in the chart yesterday. That's what I was hoping for. But here's the negative on the chart. The chart number one isn't trending right now. Can it start an uptrend here with this pattern? No. It's got a higher high, lower low. What can it do? If it takes out 117.49, it can start a downtrend because you could then have lower highs and a lower low. You can't flip it around right now. That could call for a challenge of the 18-day average at 117.07, which gives me what I want. I want the market to start a consolidation process. I'm already committed to the bull camp. You know that. As a chartist, I'm committed to the chart. So fundamentally, I think things are going to get better. As a chartist, not necessarily. And which cap do I wear? This is the cap that you wear. Throw your other thoughts out. It's the hardest thing in the world to do, but you have to be ice cold and do that. And if you don't, and you want to be a chartist looking at charts on a daily basis, why are you doing that then? So this should be your roadmap to what you do. And it's saying do nothing right here. When I come over and I take a look at the Bollinger Bands, you hit it once, and if you didn't get out at that time, and how often do I talk about that, take money off whether you like it or not. You take money off the first time you hit a Bollinger Band. I'm assuming at the top one you're long since the bias is up, the bottom one you're short. I have to assume that. Away you go. Now, momentum. It's correcting back to where it's not overbought. It still is there. I want you to look. Any reading in the 70s is overbought. You lost it yesterday, and at the close today, you're back in the 70s. So you're still overbought. This chart does not interest me. By the way, the only way it can interest me is on the short side. That's interesting, too. When you come to SMH, you take a look at the readings here. They're in the 70s. So the bull side of the market, for me, off the table when you're overbought. Higher lows, higher highs. Again, you had your opportunities. Markets coming back for you. That's great, but be careful of this overbought condition. Overbought conditions resolve in one of two ways. They embed, which is when this develops, and you can only get a bullish embedded reading by first getting overbought, but both numbers are nowhere near 80 and trying to go over it, so I'm not in that condition, or they correct. And then you come out of those high readings. That's what I'd be fearful of. In the XLI, overbought, riding the upper Bollinger Band. Is there a spot to buy the market here? Not to me, not when you're overbought, but I can see that if you take out 84.13, boom, just like that, you could have suddenly lower highs, lower lows, potential back to the 80 level. I'm not saying it has to happen, but I look at the potential. XLE. I'm a futures trader, right? That's my background. And by the way, I did own a stock firm. I think it was in the 90s for quite a while. And we rocked. It was fun. And I'd go to New York. We had offices there, LA. It was crazy, but fun. And when I'm up here and I see a combination of the upper 100-day average, upper because it's above the market, and the upper Bollinger Band because that's what it is, to me that's a big resistance zone. You might think this market's going to go, and I expect OPEC to say that they are going to not increase production for 90 days or so into the new year, whatever it's going to be. But I think that's in this market. Be cautious. Be cautious what COVID-19 means. Everybody's looking at cutting supply. The demand, we're already being asked to stay home. New Yorkers are being told not to be out after 10 o'clock at night. What's going to happen if they tell us not to go into the plants and so on again? You think it can't happen? You'll have to be in what's called one of those needed jobs. Be careful here. QQQ, there is no trend. You hit the upper Bollinger Band, you rang the bell, and then you immediately fell and left the trend. You're fighting at this number. Should the market close under 282.45, you'd have lower highs, lower lows, and you could be looking at the 100-day average. Battlegrounds first, the 18-day average of closes. EFA, this is the emerging market, and who doesn't want to own them? That's all I hear on financial TV. Own the financial markets. Fox, Bloomberg, CNBC. I get it. I get what they're saying. That's an awful big rally. You buy it. Have a great time with it. GLD. What about what's going here? Well, you're still in a downtrend. You have lower highs, lower lows. To negate it and get to a neutral status, you want to take out 176.91. About $2 higher in the market. If that occurs, I'd look for a battle between the 100 and the 18-day average. Who's controlling the market? The bears. If they want to take it down, you hit the Bollinger Band 2 days ago, that could be your next target. But I don't think you're attracting a lot of new short selling since you're already oversold. GDX, no trend. Higher high, lower low. Market gave you a shot at coming out at the upper Bollinger Band. If you go down, and those that are bearish, if I were them, I'd be looking real hard at that 36.15 level. TLT. Now we're into the part where if you go to 1%, let's say in the 10-year note, how's the Fed going to look at that? What if the market goes to 1.02, 1.03, 1.04? At what point does their attention start worrying about it or not caring? Which way are they going to go becomes the big question. Interest rates with a growing economy, it's what they want. With inflation, it's what they want. This is anticipation, not yet the growth that we need. And this COVID that is now shutting in, while the economic data you're reading is coming in and it looks great in my opinion, great. It's going to look bad with all that's going on. So you're looking at data that's a week ago, a month ago. Be careful with that, okay? That's my warning. COVID isn't going away and it's making the headline news. Last in the euro, there's a battle. Which way is the dollar going to go? Again, watch financial TV. There are as many bulls as bears on the dollar right now, and that makes sense that you're fighting a battle right here. The trend in the euro on the swing line is up, the bias on the close is down, and momentum is flat. It's really neutral. So that's what I think we have, a lot of neutral markets. I am in the silver market looking for positions. Now, SLV, interesting as can be. Futures, interesting to be. They tie together because SLV looks at the futures to determine the value. You know that. So in looking at what's going on, I decided to put out your special report. It's going to go off my website tomorrow, if I'm correct. In it, I cover the monthly, the weekly, the daily charts in futures, the seasonals in the futures right now through the first of the year, price counts in the chart. Next, I take you into the SLV and I cover your weekly and dailies for you and tie it all together with what I think could be the possibility of a trade. Want to find out what it is? Go to our website. Under the word research, it's there. It'll be there through tomorrow. Then poof, the magic dragon, it's gone. I'm Ira Epstein. You have a great day. I'll see you tomorrow.